Hi, this is Mark with your analysis for the week commencing the 14th of July. I've been saying all year I'm convinced that the Fed and the ECB between them are going to control price, and we seem to be having this nonsense now on a regular basis. A couple of months ago, Bernanke started to try to weaken the dollar by suggesting that QE may be being tapered. And as Fotis explained, from a fundamental point of view, Bernanke's concern is that he doesn't want to cause a bubble in the stock market. But because the US is currently buying 70% plus of its own debt from the money that they are printing, he is treading a very fine line. So we seem to have a scenario where 1 week Draghi comes out and makes a comment that sends the euro up or down, and the following week Bernanke sends it the other way. And it is difficult to trade. For example, Euro USD, last week we were looking for pullbacks at 130. What happened? We got the FOMC news came out and the speeches, bang, off it went, and you can ignore technical analysis when this type of news announcement comes out, which is why I was telling you earlier in the week and in last Sunday's update that if you are in a trade, move your stop to entry or better to protect it. If you are not in a trade, do not do so until after this news came out. Now, it's not to say that there weren't winning trades. Last week I'd shown you on the Aussie dollar, I said that there was MACD divergence. We were down at a bottom area, not far above 90, and therefore look at the market open for clues as potential longs. And I mentioned and explained that we would look for candlestick clues, and this is what we got. We got indecision candles after the market open, and therefore I know many of you caught this move, and some of you for a few hundred pips, so well done. Price then later in the week, we have Bernanke, etc. Crash, we're back down where we started again. Equally, the euro yen, I showed you last week there were multiple options on this pair. The one that worked the best was a pullback to 12800, and it did it to the pip here. Once again, you look on a 4-hour chart, you could see what happened. Came down, it was outside the Bollinger Band, and this was on the morning of FOMC, so this was a good example of getting your stop to entry. So you take the trade, the price starts to move in your favour, the FOMC news and Bernanke's speech is due out later in the day, get your stop at least to entry, and if you want to protect some of your profit, then move your stop even higher. So this was the candle at the around just prior to FOMC. You could have moved your stop here and hope it doesn't get jumped. It very rarely does, but it is a possibility, and as a result of that you would have made a few hundred pips. Thank you, Mr. Bernanke. Other things I was looking at last week, I was saying look for a potential short at 8700. I went into great detail explaining this was a monthly trend line. I think it goes back to 2008. Usual practice, enter the trade 10 pips below the area. This peaked at 8692.8. and therefore that gave you a winning short back down. Aussie dollar yen, I also was saying consider 9300 for a short. I didn't take it, worked perfectly of course, and that one went 300 pips. So there are trades around there, but this new situation, it killed a potential long on the Swissy. I had said 9600 was the main area, but along comes Mr. Bernanke, bang, ruined that one. Pull back on the pound to 150. Well, prior to FOMC, yeah, it was working perfectly, and then we get FOMC, spoils it, bang, off it goes. Dollar yen, looking for a pullback to 100, FOMC, bang, and the CAD, I was looking to long at 105, and once again, Mr. Bernanke, thank you very much, Bernanke and crew, spoiled it. So, more than ever, we have been telling you on a regular basis lately why you need to tiptoe around the news. Fotis is back with us this week for more fundamental analysis and explain what's going on globally and why they're doing it. But on a very simplistic level, do not open trades prior to big news, and if you're in them, get your stops moved to entry. On to this week's analysis. I have tried wherever possible this year to trade from weekly charts and, at worst case scenario, daily. And I have to say this week looks to be one of the most difficult we've had this year. I don't believe we're into the summer doldrums yet, and in actual fact the summer doldrums are actually a lot easier to trade than this. But once again we have this news scenario. You've got to watch the calendars. Bernanke speaks again this week, and there's lots going on as usual, so you're going to have to tiptoe around the news. So it's very difficult for placing forward orders at the market open. Best scenario at the moment, I suppose the easiest, would be if we get some decent gaps at the market open. This is the Euro USD on a monthly, and this is why we wait for candles to close, because last week we were down here and it looked as though we were on for a major break. And what's it done to tease us? It stayed back within this monthly trend line that goes back to this time last year. So no real clues there as to movement. This is the Euro USD on a weekly. And I was saying to you earlier, I believe that the powers that be have decided this year they're going to roughly keep us between 135 and 12800. Main areas here on the euro for the week ahead: 13300 I am interested to short, and 12800 again you're looking for either longs or shorts dependent on what it does in that area. Same pair here on a daily, and on a daily that 13300 area also happens to be 78.6 of the recent move at 3270. You've got that weekly 55 here, and you've got that monthly 55. So there's a lot going on in that area. Now, on Friday, after the big move on Thursday, what happened? Price came down to the pip, touched and bounced off 130. So in theory, this should be an area of support again. But I will not place a forward order. If I was going to trade this, I would go down to 4 hour. And as I showed you earlier, be looking for candlestick formations. But as I said earlier, this is not an easy week. And the only way I would trade the euro other than this one is sitting there and watching it. Your final option, of course, if it breaks and closes clearly below 130, you then look for a pullback for a short. British pound on a daily, similar scenario to the euro. We broke above the 150, all important. The next candle came down, perfect M2 move, but again, this was FOMC day. 15300 is a major area for me for potential short. 150 again, as with the euro, you're going to have to sit and watch it on a 4 hour chart and see what it does. Watch the candlesticks, look out for news and see where you go from there. Euro yen's a little bit clearer. We are still, for me, in this sideways range, and therefore the same scenario as last week. You're looking for shorts at 131 and longs at 128. And then if you get a breakout, personally I would wait for a breakout and a close on the daily chart at the moment. It saves you being whipped out of a trade that you've got into. So if price breaks and clearly closes below 12800 on a daily, I would look for a pullback to short. And if price clearly breaks above 13100 on a daily, I would look for a pullback for a short, but a long rather. But in these areas, I will be interested from 4 hour and even possibly forward orders on these. I need to check the news. You have to be careful on Monday with the yens because it's a bank holiday in Japan as well. Euro pound. Recently the euro pound was bouncing. It was bouncing below this bottom trend line, but roughly it was bouncing between 8500 and 8600. The minute we seem to have moved up the staircase, and we're now bouncing between 86 and 8700. Again, not something I would place forward orders for, but those are the main areas of interest for potential trades. Aussie dollar yen, we had the big move on Friday. We've broken it and closed below 90. And you can see here this has been major support and resistance. Standard analysis then is you look for a pullback with a view to a short. Now there is Chinese news out over the weekend, and there is a hint in the rumour that it's going to be worse than expected. So the Aussie dollar could continue to drop. Again, the Aussie dollar has been very difficult of late. I'm going to go on to that one in a moment. But on a 4 hour, look at 90 for a potential short. Dollar Swissy, no idea. It's too messy for me at the moment. We're bouncing all over the place. If you're watching intraday, then look at 9600 and look down here around 9400. Because again, we were in a range prior to this period, and those are the areas, purely and simply at the minute, areas of interest. I wouldn't entertain placing a forward order on this at the moment. This is the Aussie dollar on a weekly. On a weekly, it opened and closed in the same place. Complete indecision. Big spike up prior to FMC and back down again. And I just mentioned to you, we have this Chinese news coming out over the weekend. If that is negative for China, it should have a knock-on effect for the Aussie dollar, and that could be the catalyst that will take this below 90. Once again, a more conservative way to this: if it breaks and closes below 90, I would strongly suggest you let it do it on a daily chart. This is a major move. Now, at the moment, price has stopped. It's a double, treble bottom, and really we're at the same scenario as last week. We've got MACD divergence, and what that simply means is MACD, the pattern is going up at the time here where the pattern was coming down and going sideways, and therefore I will be interested at the open to do what I did last week. And as I showed you last week, you're looking for indecision candles like this. If you start to see indecision candles, I would be tempted to take a long back up again. I would not short in its current position because of the fact that 90 is just below, and 90 is such a major number and a major line in the sand. So the dollar yen, this is another one to watch at the open. Price stopped on Friday to the pip. It came down and touched this 50% fib and a 55 EMA. So this is now the major area for me on this pair. Long term we are in an uptrend, and therefore the way I will play this is as follows. Go down to the 4 hour, be looking for this kind of candlestick pattern for a potential move back up. From a shorting point of view, once again I would do this from a daily. I would wait for a break and close, then a pullback with a view to a short. Good thing is there's plenty of room down here for a bigger move. At the moment my bias is slightly more in favour of that long potential I just shown you. Finally, the CAD came back last week. I was looking for pullback to 105 and the FOMC news just went straight through it. What did it do though? It's come back down here and it's bounced to the pip virtually off this 55 EMA, and this is why these EMAs are important to me. It then failed to break below the monthly, so my bias at the moment is still slightly to look for longs on this pair. Once again, you can go down to a 4 hour, look for sideways candle patterns with a view to further long. If you were going to short, I personally wouldn't short this pair at the moment, but if you were going to short, look for a break and close it once again on the daily. There was a clue on this one last week. I was showing you we had MACD divergence whilst price was going up, so there was technically a clue that we might be on for a move back down, but I'm more of a mind that this is a pullback than a reversal. Could be wrong, of course, so once again, watch your charts. If you can't catch it in its current position, the other option is wait for a break and close above 104, then a pullback with a view to a long. And that's it. It's not an easy week. Personally, I am away for a few days and won't be trading, and quite honestly that's maybe not a bad thing. You have to learn to walk away sometimes, and the scenario where you put yourselves under pressure looking for trades is not a good one. If you are going to trade, then trade carefully around the news, and as I've just shown you, personally I would be waiting for moves on daily charts on most of the pairs. Wait for the move to happen, for the market to give you the direction pattern, and then make your decision. Okay, have a good week.